Hey, what's up? Welcome to webinar 133 and welcome back to the MentorFX private mentorship. We got a few beautiful things on the agenda for today. Annotations are going to be quickly churned off just like that. Very easy. And quick disclaimer, as you guys know, everything that is shared today with you guys is of course from my perspective only. I hope you all realize that most people in the industry lose. You know, the statistics are out there. You can look them up. They're on my website too. I think like 78% or something. Big reasons for why people lose. You guys will learn about them. If you're brand new, you'll learn about them. If you're not, then you know about them and you're hopefully taking actions towards alleviating some of those statistics so you can become part of those that succeed. But all in all, everything that I share when I talk about making money, losing money, taking high ARG, whatever it might be, I want you guys to view that from a simulated environment only. I'm sharing everything that I personally do, everything that I know. I'm giving you as much as I can from that end, and then providing, hopefully, really cool tools that all of you can use as well. So you can go and do this for yourself and then rely on yourself. Because after all, trading is nothing more, as you guys know, than executing positive EV, a mathematical edge. And that only comes from confidence in every aspect of what you do. And if the confidence is not there, then of course failure is guaranteed to follow, right? Which is why you will see that most signal groups, people following signal groups, people in the deep tranches of learning 6,000 different courses and 6,000 different things, including in many cases some of your friends, because I had friends on the same path that are now no longer in the trading space. Let's call it that, right? There are reasons that those people don't end up finding the kind of success that they might want to be after, right? It's a lot of work to put in. It's a lot of work that you have to do to get to a point where you're quote unquote trading profitably and doing it full time and doing it for yourself. It's not as easy as here's your little blueprint of the day. Now go with that, run with that little fishy, and make yourself tons of money. If it was like that, everyone would do it. Everyone would find profitability relatively quickly, and there'd be no issue. It'd be as simple as that. We could sell one indicator, right? Tell them where to buy or sell, and everything will fall into place. But sadly, from a money-making perspective as a starter, that is not the case. But on the bright side, from the perspective of someone that actually wants to put in the work, someone that enjoys this kind of industry, that likes the idea of getting the skill down, that enjoys the idea of being able to quote-unquote work for themselves as their own boss without having to do the advertising and all the other shit that comes with owning an actual business. So the people that like the sound of that, well, this is going to be that industry. That is this skill, right? It's one of those skills where once you have it, you don't have to go out there and advertise your services if you don't want to. You don't have to go out there and find clients, right? There's none of that's involved. This is a business where you get to be the entrepreneur, you get to be the leader, the CEO, the founder, whatever you want to call it. And at the same time, you don't have to do any of the other work that many businesses require. That is what this skill, that is what this industry brings to you. And it's a really cool skill. It's a really cool industry, but it's for a specific kind of person, right? And many people truly think they want it, but don't want it. And others that do want it end up finding a way to get it. So don't forget that many people lose. Dalen says, no clean mugs in my house, so using a soup bowl for coffee this morning. That's funny. I go to a restaurant nearby where if you get a large coffee, they'll give it to you in a soup bowl. So that's funny. What's up, Dan? What's up, Jonathan? What's up, Huzaifa? Good to see you guys. Michael, Troy, Peace Pod, as always. Why am I a minute late? My bad, man. So yeah, guys, Merry early Christmas. We're coming to the end of 2023. It's very exciting as we come to the end of it. 2024 is going to be jam-packed with a ton of beautiful stuff, as always. No coffee. Oh, God, Dan. Dan's going to fall asleep, dude. He's going to be snoozing in 5 minutes from now. Starbucks is shut down for Christmas Eve. Well, good thing tomorrow is Christmas, right? So markets are going to be either much slower or you won't even be touching them if you're with family. No, Peace Pod, I didn't receive your 30K. So Alex D asks, Wyckoff markings, question mark. Yes, these are Wyckoff markings, and hopefully you see, even as they're on here in front of you right now, the trades I take, whether these are on here or not, do not change, right? As you know, Wyckoff, from Section 3, from the entirety of the course, is ingrained in the way that I study prices, view prices, analyze prices, and then actually follow them. And I'll talk a little bit about it today, but in some instances, I've seen a lot of people have struggles with determining what ICI are you part of, how late are you in the trend, when can I trade the trend, when should I be getting involved. And one way to do that, so today you get to go back a few years to what was taught, if you for some reason haven't worked through it, but you should have at some point, to see that the same blueprint of everything we've always looked for is consistently playing out. And oftentimes, the completion of a schematic, as you might call it, of an accumulation, of that weak to strong hand transfer, of the accumulation completing, is very likely going to begin the start of some form of stage 2 before the sideways again. And hopefully you see that if you can allow yourself to, for instance, wait for elements of Wyckoff, for the elements of this weak to strong hand, and view it from that perspective rather than, I want to see price go sideways and then I can take a trade. Now you have potentially a way to gauge patience, right? Once again, so it's a rule for patience, if anything. And then you can go get involved again through new ICIs to the top side, or through fractalized MBs or double MBs, right? Because if you're trading this double MB, like maybe this one right here, and then you're taking a loss, you might again be confused. Why is my double MB that I took here not working? Why did I take a loss on it? Why didn't it start the move? And then if you judge it from the standpoint of, let's say, the MAs, you could say, okay, maybe it wasn't close enough to the MAs. If you judge it from the standpoint of ranges, well, there's not much you can do with them because the ranges are there, and whether it's, so this is the range, whether it's here in the range or here in the range, it doesn't really matter because the MB range has already shown you what price wants to do. So you, in some cases, may need a better tactic, a better rule, a better fundamental thing to grasp onto that allows you to sit back and say, nah, this is not ready. And one of those things, for instance, is the fact that if you start to label or you understand how a Wyckoff schematic functions, which is, all taught in this course, like from the very beginning, actually. Section 3 teaches you like the very fundamental aspects of it and how to think about Wyckoff, and that hasn't changed because it's ingrained in the system. Then you would know that trading, let's say, an entry or a buy stop anywhere in this area on a 15-minute here would not make any sense, right? Similarly, taking a like buy stop right here potentially would now make no sense to you. Actually, maybe it would make a little bit of sense. But the point being is it starts to create another element that you can actually judge in your trading that isn't just, oh, it's experience, have fun, right? Because it can look like to a lot of people that everything I do is based on a ton of experience, which it is. I've put a ton of time into the markets and a ton of study and doing the same thing over and over. So there is an element of experience. But at the same time, I can break down to you almost with any trade that we look at, every fundamental back piece, whether it be Wyckoff, the movement of the MAs, the ranges that we exist in, the idea of stage 1 and stage 2, the idea of the screener, how it functions with all of this, the actual ICI entry, how it looks when the MAs, how the ICI entry looks in regards to the MAs, etc. I can break down every single one of those pieces to make it as quote-unquote mechanical as possible, right? But for you to start spotting it yourself, you'd still have to do that kind of work. Right, so for Alex D that says Wyckoff markings question mark, even though I don't know what the question is, the reason you see them here is because I want to remind, especially those that are brand new and just working through Section 3 now and like, oh, I've seen no Wyckoff in a while when he posted the MetaFX trade ideas. I want you to remember that it's ingrained in the system. This is it right here. It's the understanding that this is those elements of stage 1. This is that element of weak to strong hands. This is that element of that's what's happening. And now, due to it being a snowflake and due to the fact that you're already expecting a certain direction on this market, as the trades begin to present themselves through the potential start of a new run, you start getting involved for the beautiful losses or for the beautiful wins that now, I get to manage this trade. Happy holidays to you, Livner. Quick message to you, Mr. Men. Backtesting 6 months of ICI and level up this one by reducing to daily, hour 1, and the 5-minute, and the results are awesome with S&D validation. Good. In the one-on-one, you said you would rather go long on the right rather than the left. Can you explain the thought process, please? So this has a lot of pieces of what was happening in that one-on-one missing, because this is not the context of the reason I'm going long. If this is the only thing available in the market, if this right here, where's my annotate? If this right here is the only thing available in the market, I'm never going long here. If this is the only thing available in the market, I'm not going long here. Unless I have other time frames as well, number one. And if anything, with these two comparisons right now, this one's much better, because at least you have a bullish break, even though this is likely to be redistribution. So this question is framed rather poorly, but why would I have rather gone long here? I think you should watch the specific one-on-one for that, because most of the one-on-one covered exactly that. You had a very bullish market already established, and you had a huge range that price had existed in, and then within a lower time frame, you've already had the establishment of a back and forth market already happening, with the next break being a straight validation of accumulation, just due to the fact that the blueprint was happening. So that is where the entry happened. But specifically this is not good. I would not trade this. So the K sends a little Excel for us. Let's check it out. Yeah, dude, this looks great. This looks really good. 40% win rate, 200 trades. Since the we don't have date. Oh no, we do. March and April and February and January. Sorry about that. February, March, April, May. All right, nice. January, February, March, April, and May. Yeah, looks really good, dude. Looks solid. Great job, dude. Keep it up. Morning and merry early Christmas. Likewise, sir. Good morning. Rare time I'm able to hop on live. Happy to be here. I'm happy to have you here too, man. Can you take a look at IWM? Things are starting to make sense for me finally, but this one has me a little confused of where my bias should be. Well, what do you think before I even look at it? I'm going to say in response to this, right? If things are making sense, let's say, and you understand how to read some markets, and then you're looking at a market, whatever it might be, in this case, IWM, and things are very confusing about bias, what do you think I'm going to say about it? So he says, I'm going to say it looks higher. Did you test it yourself? That's partly. The main thing would be, if you're having some success in understanding, what's actually going on markets, and then you look at one and you're not sure, why are we looking at that market, right? The fact that you're not sure is telling you something. When I look at a market and I'm not sure about what I want to do next on it, it's telling me something, and I walk away from it, right? So again, it's going to matter a lot. It's going to depend a lot what time frames you're actually trading. But this market, I would not touch. It's in accumulation, but it's ugly. That's it. It's very simple. If you are trading a much lower, it's in accumulation. Recently, it's in reaccumulation. So bullishness is there, but yeah, if you're trading a lower time frame, you can look for bullishness, right? But if you're trading a higher, like you're stuck in an area. You're stuck in here. Most recently, you've had some accumulation breaks. I mean, these have been very nice. If you had entered or traded anywhere around here, you're good. Right now, you're extended. You're probably going to get a snapback. So I probably just wouldn't touch it right now. That's it. So yeah, I don't see much on it right now. I mean, again, this is one of those examples of you're really late to the party. The entries on this thing were here, 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 here. Now you should be watching it. Now it's very likely entered potential distribution, right? It's not in distribution yet. It still says reaccumulation, right? 15-minute probably the same thing, but it's likely entering into some potential distribution now. So if you're trading a much lower time frame, then yeah, maybe you can get involved on this. But then as we get down there, like, yeah, it's just ugly on the lowers. So I wouldn't touch it. It's a long path, and only if you have the perseverance to succeed. 100%, yeah. I'm 145 backtested trades into a journal, and I'm enjoying the experience increases I'm getting. Looking forward to getting more trades and improving even more. Good. Hey, man, what was your best trade of the year you can recall? Can you break that down? Probably the Nas trade. Not even gonna lie, probably this one most recently. I mean, you have the outlying, like, you have some outlying crypto trades. You have a really good GJ trade. Where's my GJ trade? I remember a really good GJ trade. I don't remember where it is though. Oh, it's this one. I don't have the full one drawn on here. That's not good. When was this? Let's go check. GJ 11.3. Oh, look at that. We spoke about last week about this going sideways, and it did. So that's nice. January, February, March, May, June, July, August, October, November, December, November 11th. So something around here. Whoops. Seems like one of my best trades this year, or in the last few months, 5 months, 6 months, has been here. Looking back at it, yeah. Yeah, looks like a good trade too. I buy stop this. Is that right? A lot of trades this year, so hard to remember them all. Did I take the wrong photo for this thing? $11.3. I don't know, it looks right. Oh, that's why. That's a decent trade, but where's 11.3? Somewhere around here. Ah, there it is. Yeah. Trades higher through this high. This is probably one of my best trades, I guess, then. In the last, like, 5 months, 6 months or so. Had a -1 in here. Looking back, though, I would not take this anymore. Personally, this would not be a trade I take now. But this one's great. Yeah, this is a really good one. Took that buy stop, and then it just, in this case, it just took off for no reason. So, and if I found a way to hold it, geez, that would be insane, right? I could get absolutely crazy. How long did that thing go for? It was back here, right? So it was right here. Yeah, this was one of my best trades, and then, you know, I'm not here participating in the whole move at all, sadly. But yeah, this thing was beautiful. Went through its normal stage ones through other time frames and then failed to continue going, sadly. But yeah, I don't remember exactly where I got stopped out on this thing. Remember, I took a first partial like very quickly because this thing went insane. I'm sad I don't have the full screenshot of the full management of this trade though, sadly. Yeah, so I started moving the partial. I mean, 11.3, I probably have it documented in the Discord, so let's see. During 11.2, and then we'll go forward. In Mentifex IDs. 11.2. Looks like this was the final one from 11.2. Okay, here we go. Cool. So 11.3. Yes, we were in that trade and we started to partial it off that accumulation. Still active. Still active. Yeah, so started just moving price with the candles. Absolutely crazy. Still active. Moved it again. Yeah, so I just got to keep moving. Still active. And then, yeah, there you go. Then I got stopped out of my first half for 4R gain, which was just insane. And then I sent this out, and I think this is what actually happened on the higher time frame. But you know, you can't live through them all, can you? Let's go right here. So 1 hour. Yeah, so there you go. Let's move this down. So this was that trade, and then we sent out. Yeah, I mean, I don't think I was able to participate in the whole thing, but whatever. Some Bitcoin stuff, not important. Where my GJ thing at? Yeah, so there we go. So I started moving GJ with the MB rules, the double MB rule. Then I just moved it right onto this low. And then, yeah, and then I got stopped out right here, I think. Yeah, and that's your 10RR gain. So that was it. So yeah, I only took that's what I thought happened. So when I was looking at this, I was confused if I held more of it, but I didn't. So I got stopped out of most of it right here. Right? That's just your just to put it into perspective for the question you asked, right? Like my best trade was that. That's a 10RR gain. It's 10% gain, which is, it sounds crazy, which it is. It's a very high number, but also, you know, notice how much was still available on the table. Not just on that time frame, but on other time frames as well, right? This is the beauty of trading. You can show up and do this and have a field blast and have a year made, 2 years made of money. And you're just in a good spot like that. Yeah, this was probably one of my best trades this year. The NAS trade was really nice this week, so that's just been on my mind. Yeah, so I was right. So it was really close. It was 3RR under the previous one. This one was just absolutely insane as well. I had a loss during this trade and missed this one, but that's fine. And stopped out now, but we'll see what happens next. This was also one of my best trades this year. So you had the 10R gainer and then this 7R gainer, which was really nice as well. And the exact same trade. Like, if you actually study these trades side by side, like, they are pretty much the exact same thing. Like, you can get rid of these. You don't need them. And again, for the guy that asked earlier about Wyckoff, notice how this ICI was taken without me labeling this ever. And then I labeled this to show you that nothing has really changed, right? The fundamental ideas of why I have always taught Wyckoff and taught it the way that I've taught it, from a standpoint of, there's only two things that can happen. This is how they look. Here are the two types. Look for them as snowflakes. Understand what they're showing you, and then look to follow them. You know, this is just following ICI within a bullish market. The market's bullish. It's moving bullish. It's reaccumulating. It's undergone a more cleaner stage one, a more cleaner weak to strong hand transfer, and then I'm getting involved on the ICI that I see, and I'm just entering it as a buy stop, and that was it, right? And then I sent out this one as well. This one and this one. I didn't take them. because I was already in this one, but I saw a lot of you catch these two right here. These are all phenomenal trades. And if you didn't catch any of those, then you know on a lower time frame, either here or here, with the validation of demand, you have endless setups inside of here on the 1 minute and lower to get positioned in and then hopefully survive the next sideways action before the continuation. And if you did, well, right, you're just sitting pretty. Then if you notice, like, same thing right here. I took this long, I took a loss on it, but it's the exact same thing. If anything, you could argue that this trade is worse because there was no cleaner schematic. If you really want to get, like, if you want to get white coffee in about it, right? Like, you maybe have this selling climax, ST, very deep STB, deep spring. So entering this is a little bit of a gamble. It's very ugly. And then you might call this a little schematic, but this was on market open, right? So you might have skipped all of that for that reason and then prevented this loss. But, you know, I don't really care about that. And then this schematic was a little bit cleaner, and you had a great trade here, but I missed that one. So that's just how the cookie crumbles, right? Trading is so easy, guys. Get to miss out on making tons of money, and you have to watch it happen in front of you, and then instead take a loss instead. Get rid of this. There we go. So yeah, what was your best trade of the year? Yeah, definitely the GJ trade. But there's not much to break down, right? I mean, it comes down to doing the exact same thing now. There's nothing more to it. Like, we had a very bullish bias on the XXX JPY pairs. They were super clean in regards to the bullishness. You had, you know, money has shown you where it wants to go and what it's doing. It started undergoing a much deeper and longer back and forth. But if you notice, let's go right here. If you notice the back and forth, it never really gave you entries prior to this one, right? So price just started going kind of back and forth here. Never got unchoppy from the MAs and remained a little bit choppy under. Started going back and forth and then made some bullish breaks. First bit of bullishness, but MA stayed a little bit weird. So I didn't even touch it at these points. And then you had this beautiful run up away from the MAs within a potential accumulation / reaccumulation. As it came down, again, look what happened here. Without me needing to label it, can anyone explain to me what this is? Yeah, I mean, this is just as clear as day. This is stage 1 Wyckoff. This is weak to strong hand within a fresh new range, right? And if you want to label it, you can. There's multiple ways to as well. You guys know this is what I've always taught. Selling climax, automatic rally, secondary test, a weird one, right? Or secondary test in B, and these are tests, okay? So you can see at the time I entered this buy stop. I wouldn't do it anymore because of the MAs personally, but I took this. This was where I took one loss. And then as prices went, this was a test, right? Now you're in the potential, right? What is this? Based on the, hopefully you guys have seen the newest one-on-one that I've just released this week. Yeah, this is that gray area right here and a little bit above. That's where you want to get involved. You know the weak to strong hand has happened. You know what's occurring there. It's clear as day to you. Are other factors there for you to take a trade? If they are, you're likely in that middle ground between coming from a stage 1 into the stage 2. So you want to enter in those areas, right? And that's exactly what that trade was. Prices were showing you a specific direction. Prices were showing you a specific movement that they were undergoing. It started to go through a back and forth, a little bit longer than I would have hoped, right? This is a fractal Wyckoff, right? Clearly, like, you can, again, label them if you really want to. There's a spring. It doesn't have to be labeled, though. Notice that. Please notice that. We just understand what's going on there and the reasons for it. It's not like I'm just sitting there waiting for price to go sideways. I'm waiting for specifically price to do what it should do, which is undergo this weak to strong hand distribution, accumulation. Undergoes it here. Right here, it has a fractal inside of it and then starts a stage 2. And I simply took the buy stop here. And when I take this buy stop of this ICI, what is it really just buy stopping based on our previous webinar? I can delete some of these. Yeah, it's just buy stopping an MB, right? All we're doing is we're following the MBs. And all that price did is it created an intermediate MB and validated it here, and started creating another one. And I simply, right, and you can notice how the stage 1, stage 2 functions with MBs as well. right? That's it. That was my entire entry, right? You're buy stopping an MB. You're buy stopping a relevant MB. And then the way that I've come to determine the relevant MB, right, comes from a number of factors, right? So if we are to kind of break it down right now, the relevant MB, or buy stopping the relevant MB, or setting a limit at the relevant MB, right? Could you have set a limit here? After this validated, could you set a limit here and then wait and then set your stop here or here and take a trade? Is that allowed? Yeah, it's one of the entries I teach. You can do a limit as well. I personally prefer the buy stops because, well, once the market has shown me what it wants to do, the way that I've personally developed my system is that I want to be in at that final moment of decision, right? I want to be in the second it's ready, the second it's as clear as day, and I'm ready for the runner. I don't want to sit around and go, yeah, it started the move. Hopefully it comes back now. I wanted to move as far away from the hopefully it comes back now as I could, right? I want to get taken out, or I want to be part of the move that just starts a rampant start, right? So like if I'm buy stopping this MB, this down move right here, right? When I'm buy stopping that, I'm not thinking, okay, it went through it. Now I want to see a retest, which it did retest, and then I can enter. That's fine. But then if I'm buy stopping this MB right here, right? When I'm getting in, I'm thinking, okay, once I'm in, I don't want to retest. Now, actually, all of these had a retest. So notice this, guys. All of them did. This one validated, and then it retested with this candle. This one validated, then it retested with this candle, this candle, this candle, and this candle. Okay? This one didn't. This one validated and never came back. So if you were buy stopping this MB, or if you were limit ordering this MB, you wouldn't have been able to trade this, right? But that's fine. This is going to depend on the rules that you have. And some of you may be sitting here right now like, why would I even limit? Why don't I just buy stop everything? Well, what I've seen from others is that if you're just buy stopping, but you don't understand what areas to buy stop, you're going to get caught in a lot of this action, where you get wick out, right? You enter, wick out. So some of you may actually have more success by waiting for the break and then setting a limit at the MB and then hoping price taps you in. Because now at least you've had the demonstration from price, from the orders that are coming into the market, that they're able to hold themselves above a certain high, above a certain MB. They're showing you that money wants to flow into it higher, right? So like you could have buy stopped this, as I did, or you could have set the limit, and you can see what happened. Within 2 candles, it limits you in and then takes off, okay? But notice how, so hopefully you guys were here for the last webinar. If you weren't, I do suggest big time that after this one right here, you check out the previous webinar, and then you check out the most recent one-on-one, because these are all kind of their own, once again, course, their own teaching, whatever you want to call it. Because there's a growth of knowledge over time. There's a growth of the way that I teach everything that I teach, but it all comes together. And I want you to get really used to seeing how everything comes together over and over and over again the exact same way. So yeah. So the relevant MB can be defined through a few lenses, right? Regarding like, why would I buy stop an MB? One could be number of prior MBs. Another could be number of prior intermediary MBs. The model prices within. The Wyckoff that has occurred prior to entry, right? Whether it be type 1, type 2, or none at all. Maybe for some of you, you actually find a rule where you don't want Wyckoff to be happening. Yeah, I can make it bigger for you. Right, so these are all factors that go in for me to determine whether I'm buy stopping an MB or not. What does the 20 MA look like? What does the 50 MA look like? What does the higher time frame model look like? What does the higher time frame 2050 MA look, etc., right? I can keep writing these out. These are all factors that basically determine whether I'm buy stopping any one MB or not. Now, it might seem like a lot, so PeacePod says, yeah, it's a lot of factors. These are not even all the factors that go into my personal choice of taking something. But what's funny is, and you guys have seen this, how long do you think it takes me to determine whether or not I'm actually going to take a buy stop of a certain MB or not? If I look at a market for the first time ever. For the first time ever. So not 1 second for sure, but yeah, probably about 30 seconds, right? Maybe a minute. Because this is all just embedded into what I do. I know what the price should look like. I don't need to go ahead and label it now. I can label it, right? I can go very quickly and say, yep, this is clearly an STB. Yeah, this is clearly an STB or a spring. I can do that within 2 seconds. It's happening in my mind, right? Yeah, this is clearly an MB. Is it happening with MAs that look like they should? Yes. Is it within a context that it should be in? Yes, right? All of this has now happened. Even though it's a lot more to write out and look at it, it's a lot simpler than it looks from a complexity of me writing it out, right? So, like, these number of prior MBs, they're important, but I can see them already. The models they're within, they're important, right? There's a lot of them, but I see them already. All these things are within my mind the second I'm looking at something, right? So this buy stop was just that, right? So the guy that asked me, like, can you go over it? Does this kind of help you see that, we don't have to do like a deep breakdown of like, this is the special sauce fucking entry unlike any other. This is just me doing the exact same thing. I'm buy stopping a relevant MB based on the context, based on the MBs, based on the models, and based on a few other factors that I'm personally looking at, and then I'm buy stopping. And the exact same rule set, okay, was used to get into this NAS trade, this US 100 trade, this NQ trade, whatever you want to call it. Right? The models are there. Everything's moving the way I want to see it move. You have your type 1 or type 2. In this case, it's actually both types. It could be a type 1 or a type 2 schematic unfolding. You have price pushing higher. You have fractalized MBs being validated. You have the next MB being buy stopped. And that's it. That was the entire trade. And then as this is happening, I told you guys, yeah, it could take me out and then give us another setup here, or it could just set up again. And it did. It set up here and here. Right? Beautifully. And again, what's cool about showing up to these webinars is that, look at this, okay? This is the 12th of December. Hop in here, go here. December. Go one day before. Go over to it and start looking. Was he telling me about this? What was he saying? Here's the entry I took through the buy stop of this MB, okay? And then, what did I send? Well, first I sent this, right? What I wanted to see. Buy stop setting up through those highs. And then price starts to take off. And I simply start managing this thing, right? An expectancy of what I'll want to trade. And then it just goes. And goes. Not important, and goes. And I start to manage accordingly. And it starts to go. And go. And it's not even stopping me out. And go. And it just won't stop me out. And then it stops me out. and then it goes. And then it stops me out a little bit more. Where was it? A little bit higher, I think. Yeah. Right here. You guys can see, like, this is very upsetting to me, but it happens. These are my rules being followed. Anything could have happened, but here, check this out. I moved my stop below this low. Look what happened. Price took me out by the smidgen of my teeth and then took off. Like, it sucks because I could have made a lot more money on this. This could have been my best trade. This is why, by the way, when I was asked what's my best trade, I thought this was my best trade, but it's because of this partial right here, that made it not my best trade, right? That's really all that happened. If this had held itself, or I had been a little bit smarter, maybe put this stop maybe here, or even just kept it down here, this would have been probably a 15% gainer on my account, 15 to 20%, which would be insane, right? Maybe 10 to 15% gain on my account. But this is what happens. This is trading. You cannot for the life of yourself expect or know exactly what you're going to take out of a trade and how it's going to go. If you do think that, it's going to be really hard for you because it's not a market that's predictable like that. Okay, the market is only predictable from the lens of, if I repeat this system, I'm going to make money and I know what to expect and what to look for. But at any given point when I'm in a trade, I have no fucking clue if I'm going to make 10R, minus 1R, 1R, 2R, or break even. I have no clue whatsoever. I can't predict that, right? All I can do is follow rules. And those rules result in, well, I mean, you guys have seen it firsthand in beautiful, beautiful playouts, right? I mean, like, absolutely beautiful. And again, same thing right here. Took a loss. Can you, sir, show me an example by drawing a maze when it shows choppiness for you? By drawing the maze? This is choppiness and a maze right here. This is choppiness and a maze. This became unchoppy and then became choppy again. This is choppiness in MAs and in price. This is clarity in MAs, but then no setup, and then it became choppy. This is choppiness in MAs, just clearly. This is all okay. This is choppiness in MAs, etc. Again, you're gonna have to do some of your own studying for that. Or you can take like a one-on-one and give me examples of areas of price you're using, and I can walk you through why I might or might not use it. Okay, but there's no like special sauce of like, this is the choppy MA. Notice how I don't have anything crazy coded for that. Notice how it's my eyes that are making the assumption there, right? And then it's based on also other factors, because again, the MAs are not the only factor that determine if I'm trading something or not. There's the context, there's the price, there's the models, there's the multi-time frame models, etc., etc., etc. That's all going into the thought process. Hey bro, Justin, what's up, Steve? Good to have you here, man. Hey man, what was your best trade of the year? So yeah, my best trade of the year, definitely, I'm gonna put it this way. The best trade of the year should have been this one, okay? But it was the GJ one. That's really it. And don't undermine that, right? That's a 10% gain. I had a 10% gain on my account, or sorry, like 7.5, because I risk about 0.75%. About a 8% gain, 7.5% gain on my account, just off of one trade. This trade is about a 6.6% gain or something like that, right? Do not undermine that. That is an insane gain, just off one trade, right? That's paying for future losses like this, right? I'm just gonna jump in here really quick. Like, look at this, guys. I had a -4 RR week, and then I was expecting this one to be another loss, right? I was expecting this. I even sent this. I said, hey, this is what my curve looks like if I take all losses. Can't wait. Let's see what happens. But then all of a sudden, as you guys know, that's the gold trade. All of a sudden, as you guys know, it started to take off, right? And then boom, it just took off, and I started partialing into it. So now I'm up 3.1 RR on this minimum, right? So that's this right here, the first partial here and the second partial here. And now I'm holding the rest right now. So hopefully this starts a, even bigger move this week. But once again, it's put me at that same kind of area in my curve, right? Like, look at this. This is my losing week, by the way, right? I had 4 losses this week. Do you think I'm here, like, worried about anything? Happy Christmas Eve, Anton. I hope you have a wonderful holiday with your family. Thank you, brother. I appreciate you a fuck ton. We have a really cool thing we're doing today. We're hitting like the Disney on Ice thing with the family, so I'm excited for that. But first, the webinar. We must make more people understand more things, so that more people have more things to work on. Oh shit, are we maxed out again? Do I have the? No, we're not. Okay, good. Phew. Just didn't see them for a long time, but of course I understand things underlying. Good. Wyckoff is simply liquidity being taken, which creates a fulcrum point for you to view as the AR. Once it's taken, we assume it's trending. Can just draw a trend line. I mean, you can kind of draw whatever you want, right? Like, you can even draw a box, right? And then buy stop above the box if you really want to, right? If you guys remember, one of the things I taught was buy stopping the overall accumulation, because all you're doing is, if you're buy stopping an accumulation, what are you actually doing, guys? You're just buy stopping. And can you believe it? If you buy stop an accumulation, you're just buy stopping a fractal version of an MB. Just one of them. That's it, right? If you buy stop another accumulation after, does anyone notice what you just buy stopped? Right? Like, I hope you're starting to see that, one, timeframes don't matter. Two, the market does the same thing on repeat. There's just a way that you need to learn to view these things. If you just think going to any time frame and buy stopping any down candle is going to make you money, you're going to be fucked for life. This is why the normal principles of like, wait for an engulfing candle don't work themselves, right? Because if you're just buy stopping every single one of these you see, you're going to be fucked. You need to understand the characteristics of this exact thing happening across timeframes, across markets, across the things you're looking at to decide which ones are even relevant to be taking, right? That's really all that's happening. It's the same thing on repeat, right? And now you can tell where the market, you can look at this. Like, all of you should be able to look at this now and understand what the likelihood of the next move currently is. Okay? There's nothing complex or crazy about this. It's just a question of, is it worthy of putting on my risk on it? So now, like, based on the other relevant factors for myself, there's nothing I'm going to take yet. But if this can undergo a schematic, right, start setting up, the MAs can start to move higher, the 20 can start to move higher, and then all of a sudden maybe another schematic happens here and it sets up here. Do you think this buy stop inside of here is a good trade? If this can happen this week on gold? And if people are saying yes, exactly. This is perfection. This is exactly what I want to see. You have a bullish market, okay? Let me go ahead. Let's refresh this. You have an extremely bullish market. That's gold for you, okay? So I'm just looking at gold here. You have an extremely bullish market that's telling you where it very, very, very likely wants to go. The sentiment is not against the overall screener, okay? It's a little bit 50-50 here, but that's fine. Intraday is whatever, high, but this one doesn't matter too much because if you're here, you want to be using the screener. The screener is hands down the best thing ever created, okay? So this thing is showing you what it wants to do. That's good. That's a starting point, right? The higher time frames are showing you the exact same thing, okay? It's been showing you that bullishness for a while. I've been talking about this bullishness for a while. The 1 hours are validating and doing the same thing. I sent this out this week that I was watching for, okay? And as we jump to the 15-minute or whatever you want to call it, you're now having accumulation, right? Going through this, coming into accumulation, going into clean bullishness, setting up trades, right? That's all I entered. So of course, if this can happen this week, it's going to be a phenomenal trade. What did you send here? Yeah, and you don't need this at all. So just remember, guys, you do not need this, but this is most traders right now. There's a reason they don't understand where price is moving. 60% of traders are short right now on this thing. That's who we're liquidating. That's who is the other receiving end of all this. And it's not just the retail people of this end. There's large end investors, hedge funds, institutions, banks, blah, 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 averaging down on this thing, mitigating into position. So, there's huge fish in this thing, which is really important to remember. But like, there's a reason most people have the wrong understanding of this. And again, whether or not we're correct or wrong about this, most mentorships already are getting ready to short here, inside of this imbalance, and here, right? Which is why you can see even the movement I drew out here. You can see how it interacts even with those orders and how it creates even more orders for us to continue liquidating. Now, I might be wrong, of course, but this is why what I've done for myself has worked very, very well, and why people that have followed this methodology have continued to get better and better at actually reading price, right? You're not stuck here just looking for the next come down, induce the low, induce the high, Asia range, take out Asia range, distribute into New York, right? This is not how I've taught you ever to view or think about prices. And luckily enough, when you don't think this way, you open up your ability to start trading multiple time frames, multiple markets. You stop thinking about the actual time of the day or anything crazy like that. You stop thinking about these weird ways of thinking about highs and lows, and you start understanding what drives markets. You're not sat there thinking, where's my next imbalance that price is going to reach for, and you don't even know what's happening on the left side of price, because guess what? I can go to any market right now and it's going to look like this, right? There's always, on any market that I click on right now, you're going to see something like this, and you can go and you can draw this if you want, and it's not going to help you do anything. It's a very different story to actually put in the work now and be able to go to any market and say, okay, what has the market been showing me and what has it been telling me? Is it telling me it wants to move in a direction? And if it does, how have the moves in that market sustained themselves? Does this market show me that it wants to start making a move, or is it just not doing what it needs to do, right? You are no longer trapped by this dumb way of thinking where like any market is doing all this same thing and you just have to figure it out and hope that it works. You now have a way to base and decide for yourself whether looking at something is worthwhile. When you look at a market now, you can say, this is something that I want to trade and take risk on, versus this is not clear. This is not moving the way it should be moving based on my system. I'm going to walk away from it. Most people and most mentorships cannot do that. For them, it's just like, well, it's technically taking out a high. I have to try and get into it with the change of character or whatever it might be. You need to remember that markets move in a very different way to that. And most people will not put in the work to learn how those markets move. Instead, it's going to be a game of what we just kind of spoke about, right? Trading requires a certain level of discretion, which cannot be taught. The only way to learn it is via experience, as concepts don't work without practice. Yep. iPhone asks, is there a minimum amount of years you have that we must backtest with? I have access to 5 years. 5 years is way more than enough. In all honesty, now this is not a guarantee of any sort whatsoever. Not a guarantee at all. I think that on average, learning a concept or a conceptual approach to trading, which is, for example, what I teach, should take you about 1 to 4 months easily. You should be able to go through this entire course usually within probably 3 to 4 months and have a really good grasp of everything we do. And then I think from that point, a year up to 2 years, you can have a fully functioning and very profitable system that you can execute. In some cases, even shorter. So yeah, but again, this is not a guarantee that if you do that, you're going to make it, okay, at all. I'm just telling you what I think. And I think that that's amazing because that puts you under the timeline of what it would take to go through college. It puts you way under the timeline of what it would take for you to go through middle school, high school, college, and then potentially even graduate degrees, right? It puts you under the timeline of having to work your way up in a potential job for 10, 20 years until you reach a earning potential that you're happy with, et cetera, et cetera, et cetera, right? Insert the blanks. But again, most people hear that for the first time and they go, what the fuck? I don't want to do trading if that's how it's going to work. I thought trading was like I pull up with my money in my Robinhood account, throw it at a fucking stock or an option for a little bit and make some fucking money, right? What the fuck is this bullshit? Learn, right? It's like, okay, well, good luck, bud. Right? Like if you couldn't learn in school and do your homework, okay, what's going to make you think that you're going to be able to pull up and do your own learning, not even from someone that's telling you what to do, with no grading, with no one telling you you're doing it like potentially wrong, or no one stopping you, or your parents not telling you that you need to get back to fucking school or get back to work? What makes you think that if you can't, function normally outside of where you have other influences, what makes you think that when you're your own influence and you're learning on your own that you're going to do a lot better? Some people do, and that's fine. But like if you've proven to yourself that it's very hard for you to do something, then going into something that literally requires you to fully make your own choices is going to be fucking impossible, okay? Which is why a lot of people that come into here that are like, I don't want to do any of that shit, I got to get my money quick, take my money and run. They get screwed over fast. iPhone says, and doing a lot of research, did you know a lot of people who are billionaires had their systems mostly on the higher time frame, a daily and higher? Yep, exactly. Most of the largest traders of our time ended up making most of their fortunes on the higher time frames. Why? Because more access to buying more, holding longer periods, and just allows them to scale their accounts quicker. They don't have to worry about okay, I got to get into small position here and small position here, small position here. Just like you take your normal risk on a higher time frame and you're good to go. Done. Thanks for answering my question and walk us through your thought process on GJ. Very insightful. No problem, dude. I actually like that you labeled Wyckoff on this NAS trade. I wouldn't have looked at it like that before. Not that it's going to change anything. I do, but just different perspective than before. Good. And that's one of the main reasons I labeled it. Just so you know. One of the main reasons I labeled it is to show you firsthand that, one, nothing has changed. Every concept I've taught you, everything we've done, even though it's evolved, has remained ingrained in the entirety of the system. And why it works is still there. That hasn't changed. Things don't stop working magically. And point of labeling it, so one point of labeling it was to show you firsthand how these are elements of some of my best ICI trades, right? And now I'm going to show you that firsthand. Watch. Watch. So here's a good trade. Oh, wait, that's the 7.2 we made on NAS. Here's a good trade, a 5.7R on UJ. The question I'm going to ask myself, and it might be a no, right? But right now the question is going to be, in this trade, okay, was there a prior schematic that is clear and labelable from a type 1 to type 2 before the entry? Let's take a look. Selling climax, ST, STB, spring, entry. Okay? For some of you, just this alone may be the changing moment, the changing point of you like deciding on an entry or not an entry and understanding what to actually wait for in a stage 1 or for a stage 1 to be complete, right? This could be that changing moment. Okay, let's take a look at another. That was a good trade. We already looked at this 10RR gain. Okay, here's a 4.09, a small gain. Okay. Does anyone see anything interesting about this trade? There's multiple ways to label this, but selling climax, ST, STB, spring. Test, 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 entry. Right? Why didn't Anton take this trade? Well, selling climax, ST, there's not enough of a stage 1. There's not enough of a weak to strong hand transfer. So now you have multiple factors that you can start considering in your choices to trade given price action or not. Why did I trade this? Does it make sense still? Selling climax, ST, STB. If anything, this would honestly be considered a little bit too deep for me. So theoretically, I shouldn't even trade it here. And if I didn't, I would have prevented a loss. Okay, but then look what happens next. If you keep following this, selling climax, ST, STB, STB, spring, and then you traded test, 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 you traded here or here, those trades were significantly better and then ended up in delivery, including this one here as well. So I could have prevented this loss, stayed out of price action, and then gotten involved here, here, or here, and taken a huge win. Again, these are factors to show you firsthand that nothing has changed. The MAs are still true, the model is still true, the higher time frame is still true. The only thing that's changed is your consideration of, is it ready for a potential move? Okay. Let's look at another. That's that 4.09. Here's a 5RR gain on that roll bit, right? The super, super weird like crypto. What do you see? So again, there's multiple ways to label. So this might be a little bit confusing when I label this for you, but it's here. Okay, you have a selling climax, ST. Here's your SOS and B. So again, this is all from section 3. STB or STB, spring, right? And this is your first test to take the long. Okay, or if you really, because I used to teach you guys how to label multi, you have selling climax, ST, STB, test, and takes off. Right? You have multi-fractals of a accumulation here. And again, one of your relevant factors could be fractal Wyckoffs. And you could have a rule that says you need at least 2 or more, or 2 max. These are all factors of a potentially good system, right? These are ways for you to somewhat mechanically define whether something is worth taking or not. Okay? So you're not sat there going, well, fuck. If it's the MB, do I just take it? It's like, well, if that's all you have, then let's take it the next step, right? For some of you, it might be a fractal MB, and now that it's past the 1, 2, and 3 mark, you're happy to take it, right? Those are all part of the relevant factors I've provided you earlier here when I wrote them out, right? I forgot where I wrote them, but I wrote the relevant MB factors. And then I wrote some of the examples, right? MAs, cross time frame, models cross time frame. I don't know, size of MB range, cross time frame, like off, type 1 or 2, fractal Wyckoffs, FMB, prior to entry, right? Type of FMB, was it a body? Was it a wick? Right, etc. I mean, you can just keep going. Yeah. Right, you have multiple relevant MB factors. These are factors you can consider in deciding whether or not something's worth taking. And like right now, I know if you're kind of newer, hearing all this is going to be hard, but I'm going to ask you a real question right now. Would you rather go through the process of learning which aspects of these make a setup good for you, or would you rather me slap this on you and say, all right, guys, today, what I want you to do is go to any market and look for this setup to come here at 4 a.m., look for this on a lower time frame, take this short, and good luck making money. I know this seems like a fun and easier way to understand everything, but this is going to get you nowhere in the long run. Even though you might find short-term success, this is going to give you the power to decide for yourself when it's worthy for you to work, when it's worthy for you to take entries, when it's worthy for you to take on risk, when it's worthy for you to scale up and how to scale up. You're not going to be sat there at the hands of the market hoping, praying that your random analysis is going to work today. Instead, you're going to be sat there going, I have an actual system that I know I'm looking for and that I know I can rely on because I've done the prior work. So now all I have to do is execute it, right? And then the question for you today, basically, even if you're brand new, is which one of these two systems do you truly prefer? And if still a part of you, even after kind of the stuff we spoke about today and some of the setups we've already looked at, if the answer is still this, then this mentorship is not going to be for you at all, right? That's kind of like your answer here. It's like, if you are looking for something that's quote unquote mechanical along these lenses, then this mentorship is 100% not it. Like, and not even to be mad at you or to be like, get out of here, but to show you firsthand that like, this is what you're going to be learning, okay, over your time here. And then the tools you're going to receive are going to be aspects to make these things easier and better, to make your ability to judge whether or not looking at something is even going to be worth it. So if that's something you want, this is the place. And if it's not, then you know you can find this on any new Instagram page that pops up every single day. There's like thousands of new Instagram pages that can teach you this right here every day. So use those instead, right? Otherwise, if you're done with this kind of nonsense, if you came from somewhere where you were already learning this kind of stuff, this is the next step. This is what was missing in your journey, right? This is what was missing in your analysis, in your context, in your ability to actually judge tradable markets. So that's what I'm going to provide to you when you're here. Burko says, if my higher time frame is the daily and the weekly, it's overextended. Is it better to wait? In most cases, if it's too overextended on a certain time frame for me, I will just stay away from it. Yep. Like, this is not extended at all, right? When I started looking for this trade, look where it was. The 20 is coming up. It's right there with price. The 50 is just coming up. Price is kind of sailing it. This has an easy chance in the next few days to be here and it be a normal thing, right? Because it will just extend like this and then it might snap back. But that's money I can make. So I'm happy to take it, right? You can study even prior moves and how it works, right? They kind of surf inside and then look, this is the kind of move it can have away from the MAs, right? But on average, yeah, look, when price moves, right, it kind of surfs with them and then moves away fast and then it goes through that normal chop of back and forth. So I'm trying to get involved usually in these areas here, make money here, right? Or make money here and then make more money here if I can, and then wait, right? Start getting involved here, make money here, hope that I can hold on to here, and then wait. Start getting involved here, try to make money here, look to hold on for more money, get stopped out, wait. Start getting involved here, make money here, make more money here, get stopped out, wait. Start getting involved here, make money here, hold for more money, make a ton of money here, get stopped out. Start looking here, make money here, which is what I just did, hopefully hold on for here so I can make a fuck ton more money if it wants to do that. Well, what do you see? That's where I started looking. That's where I got involved. That's where I made my money already. And now, hopefully, we get an insane move because that's how markets move. That's what they do. So I'm going to just participate in those movements and be part of them when they're ready, or when they're hopefully ready. Because again, the markets move in cycles, and if you can understand what those cycles look like, especially once you have a good understanding, fundamental understanding of like context, well, you're just in a really, really good spot. Didn't you have a way better trade when UJ was pumping like crazy earlier this year? Yeah, probably. I don't remember, dude. I had so many trades this year. It was like, it's impossible to even remember. Yeah, during this time here, there were some good trades for sure. I don't think I had a 10% plus runner though. I don't remember personally. I think I got some smaller trades along the way, but yeah, it's the same thing, right? And then we haven't touched this thing ever since whatever was happening here. And look at this. It's just been easy to sit out of, right? I don't even have to think about it. Like, it's so easy to look at this and just say, yep, I mean, there's nothing for me to touch now. But again, if you're just thinking along the lines of only MBs, well, this is your down move. And now a lot of you want to see the up move. So a lot of people are already starting to enter anything they can, right? So this is why just this approach of like a simple pattern is never going to get you anywhere. You need to learn how to think about relevancy and then across time frames. You are in the juicy gray area that everyone wants to spot and be in. Sorry. Yeah. I love how now I see what you say. That's the beautiful thing about being here. After a little bit of time, in some cases a midterm amount of time, everything that I kind of discuss and talk about starts making a lot of sense. You start seeing every aspect of it, and then you start knowing what I'm going to say before I say it, or you start getting really, really clean and fast understanding, like sprouts. Or you go through like little growth spurts of understanding once you've kind of taken the time to get down most of what is taught here. For the ICI entry, I noticed that there is often a wick before to break up, so I buy stop the wick. So you're just buy stopping an MB. Yeah, I mean, like for me personally, I would never take this entry. I'm looking more so for the entries that are already moving bullish within bullish markets. So if this was already a bullish market, this might be the start of potential accumulation. Or if this was bullish up here, which I can't see, and then it went into this, then I'm probably looking... Yeah, I'd probably wait for this to actually play out. So like if you want to label it, right? And if you imagine the MAs, they're probably doing something like this. So this should probably come down now, flush out, and then you'll probably get a trade around here. That would probably be the trade that I'd be looking for. But right now, I don't know the prior context. I don't see a lot, so I don't see this as an entry at all. But if you notice that and it's making you money, oh shit, sorry about that, guys. And it's making you money, then run it, right? You are in a good spot there. There we go. We're back on. Cool. I prefer waiting until the candle closes and use market entries because I find with buy stops or limits, the candles can wick and tap you in and then close against you. Yep, exactly. Which, like I said, like for some people, that might be the way to go. That might be something that makes more sense to them, right? Like, look at this loss. This loss was preventable if you do that. But personally, I'm okay with it because I know the moments that I'm willing to get involved, right? I took this entry. Look at this. I literally was the candle that got tapped in and then instantly got taken out, right? And then here, I was the candle that got instantly tapped in. But in this case, I didn't get taken out. It just took off, which is great, right? It's just how it works. I can't predict that. It's midnight here. Can't keep up with you guys. I'll watch a recorded one. Love to see you on the live. Love you too, buddy. I'll see you. Good night. Can you see, sir, show me an example? I already showed that. Recent 101 has also a nice explanation of choppiness. Exactly. Peace Pod says, Anton, this is for you, a gift from the Peace Pod. A very, very long message. I appreciate you. You're perfect in just the way you are. You are enough. You're all the supersized bag of chips. On a scale of 1 to 10, you're an 11. You've got the right moves. Everything would be better if more people were like you. You're an incredible human. You're one. Thank you, bro. You're very nice. I'll read through this in silence now. All right, bro. I appreciate you a lot. Thank you for the message. 8 says, gold gave amazing setups this week. Also caught the same trade as you. Congrats on everyone who's able to get something on gold. Good. Good for you, dude. Yeah, this was a beautiful trade. Absolutely beautiful. All you need for management is the assumption of market breaking you even through efficiently pricing assets and the corresponding management. Example, 2R BE loss rate equals 33% 5 hours. My brain broke, but yes, probably. I think it sounded smart, so it must be true. Anton, what's the date and session of that running gold trade? This one? I traded it on the 21st of December, and I got tapped in at 4 p.m. Thank you, Ment, for this amazing year of trading lectures. No problem, dude. It's Gable 2. Most system out there don't have that. Exactly. The liquidation of Asia highs and lows gets me every time. Yeah. That was me 2 years ago. There you go. Hey, Anton, do you consider volume as one of the factors when you pick out a stock on Stock Screen or TradingView? Only that it trades enough that if I get involved, I'm not a big deal. Right? So, like, this one was smaller. I'm in this trade. I got it in on the hourly. So I took this. And I'm still in this right now. But what's funny is, so I entered this as a buy stop. This was pre-market, and then I entered here. Right over this high, the second this tapped, just so you guys know, this entire candle, this part of it right here, was me. I don't even know, like, as I entered it, the candle grew to that point, and I had an average price of, like, here. So maybe it wasn't fully me, but, like, that, almost that entire candle was me, which is really cool to see. But usually, I want to find something that's not going to make that the case, where it's so heavily traded that my entry is not going to move it at all. It's going to be super small, right? Because I don't want to be the big fish. I want the big fish to do the work, and I can sit there and just profit off of it, right? But this has been going very well, so yeah, it can be something that you watch for. Thanks for today. Merry Christmas, everyone. Got to get to dinner. I'll see you, man. Much love to you guys. I have to go, but thanks for this, Webby. Wish all the best for you and your fam. Likewise, man. Will the Webby be on for next week, or I'll see you all in 2024? Probably not. So we actually will probably have a one-time no Webby the next week, because I'll be away as well. I'll be in a different state. Be skiing with the family, so we'll see. Have to make a move now. I'll see you guys. Anyone that has to leave, I appreciate you being here. I'll work through some of the stuff that I wanted to work through today. Just a few things on the plate. But much love to all of you that have to go. Merry early Christmas to you guys. Mwah. I'll see you all if you do leave. Been trading for so long, you see BE and think BE. Yeah. I remember my first Webby. I thought I made a huge mistake. Oh, when you get here and it's all really confusing? Yep. But again, confusing is always good. Nicholas says, Mentafex, I feel like I'm very close to being profitable. I just need to become more confident by backtesting. Do you recommend me to still jump all the way back to webinar 1 and watch everything until today? Not if you've already done it, even though your entries were a different one compared to the ICIs I'm working with right now. Or should I use my time to continue my backtesting? I would keep backtesting. Because remember, if you've seen some of the older stuff, the ICIs are nothing more than a repackaging, let's call it that, a repackaging of buy stopping an MB, right? In some cases, it's a double MB. In some cases, it's a triple MB. Sometimes it's a 4 intermediate MB. But an ICI is simply buy stopping a relevant MB, right? That's all it's ever been. So yeah. Ment, do you think a return of 115% after 650 isn't a very good 650 trades? I mean, money made is money made, right? There's some systems out there that make 1,000 trades a day and are profitable, right? So that's just asking me that doesn't really help, because I mean, if the RR is positive, if the EV is positive, then you're fine. Alex says, I remember when I first found out about trading and told my friend we can have a Porsche within 2 months. There you go, dude. Exactly. And be on a beach. Yep. Anton, can people get rich purely trading commodities? Only commodities. You can get rich trading anything. Hey, just joined. Had lost electricity here up till now, and Merry Christmas, Anton. No problem, Valley Boy. Merry Christmas to you too, brother. Why don't I see any S&Ds on your charts? Because I don't need to draw them in. It's not really necessary. If you want me to, here's a validated S&D that I started to look for longs after it got created. Here's another one. Jump down to my time from entries. Here you are. S&D gets validated, just like I taught in the remastered course. Price undergoes accumulation as demand is validated within a bullish context. I take an entry through bullish MBs, right? I no longer look for price to do this kind of thing and then confirm. This is old school. This is not necessary whatsoever anymore for me, at least. And Anton, if you could go over demand and supply validation briefly, because I'm on webinar 113 and I still have not come across the concept. Yeah, dude, check out the remastered course. Nope. Remastered. Go to the MenTFX Mastery section and watch the S&D section. No, I'm going to Utah. What TradingView chart or broker would you use to trade oil and commodities like wheat and soybeans? Well, I don't trade in TradingView, right? You can use any chart here to trade any of those things like soybean. There you go. You can look at this. You can look at these. The CBOT probably is the best because that's the actual futures market. And then to trade, you would use a broker that has access to futures. Valley Boy says, ICI is also buy stopping into stage 2 of the fractal accumulation coming out of the reaccumulation. That was too much words for me. Maybe. That was a lot for me. Great area for different management, though. Yeah. Chen says, hey, Anton, could you explain why you think trading options is a losing game from a technical perspective? The simple thing that I've heard that I understand to be true and that makes the most sense because of everyone that I've ever seen trade options is very simply this. Unless you've already made $1 to $5 million of profit trading, you shouldn't even touch options. But the problem is if you've made at least $1 to $5 million profit trading, you start realizing you don't need options. So really, it's a losing game overall because if you're doing options and you're not profitable, you're likely losing even more money than you should be losing because you have no idea what the fuck you're doing. And if you've already made money, you start realizing you don't even need options to keep making money. The only time options become actually important is if you start growing your account to $100 or higher $1 million account. So if you're at 100 million or higher, you may start to use options for the purpose of liquidity because you need that kind of money available. So you can do that through contracts. That's it. But simply, options are just a losing game for almost everyone that's asking anything about options at any point. Guaranteed. That's really all it comes down to. If you're not profitable with no options considered, you are going to be fucked if you start trading options. Okay? That's it. It's really, really simple. Men Funding offers them commodities, etc. I think Men Funding has like some stuff like that, but I think it's more FX based. You can look at what Think Markets offers because Men Funding works with Think Markets at the moment. Good morning, iPhone. Good to see you, bro. Good to see you. But yeah, Chen, the real question is, what makes you think that options is a winning game? What has options done for you that normal trading hasn't? Is the better question, right? And the second you can start answering that, you'll start realizing that options don't make any sense anyway, right? But if you want to, you can offer me that perspective, right? What has options done for you that normal trading hasn't? Now, let's go over some stuff. 89 remain? Yeah. I think there are only like 90 or so people. I think most people are sleeping in or getting ready for Christmas, which is perfectly understandable. No problem with it. But we're showing up. We're here to do some work. And they'll be able to catch at any point later, right? Only the legends remain. I'm here because I'm sick. I'm sorry, dude. I hope you get better. But yeah, Chen, I'm still waiting for your answer, by the way. Like, that's what I'm watching the chat for. Let me know personally what options have done for you that trading has not been able to do, right? Because I'm truly interested. Because again, like, I think it's a losing game, not from just a technical perspective. That doesn't really matter whatsoever. But like, what has options done for you? Where have you made money trading options where normal trading has not given you that opportunity, right? Is the main question. So I'll wait for that. So let's quickly work through aspects of this gold trade. And then I want to go over a little bit of what just happened over the week and share that with you. So first things first. Okay. First things first, here's gold with nothing added to the chart. You know what? We'll actually do this a better way so I don't delete all my things. Let's go into, let's full screen this. Let's go into here. There we go. Cool. So first things first. I'm going to move this over a little bit. Beautiful. Okay, so here's gold. And why did I trade it? What the fuck was going through my mind? Where did I even get to the conclusion of trading this thing? It all started on a dark Friday night. No, it all started right here in the screener. Okay, I simply just was looking for something to do and for something to trade, and I had no idea what to do. So about 2 or 3 weeks ago, I clicked on this little guy. And I simply said, on a higher time frame, in this case a daily, because it's usually my higher time frame, I want to see bullishness. On a 4 hour or so, I want to see general bullishness. And on a 1 hour, I want to see bullishness. Okay? And then I had another one that I did the same thing for on bearish. But first I started with bullish. Okay? So I simply clicked on that, I went over, and I started looking through this stuff. And what I saw, and you guys might remember this over the last 3 weeks, these are some of the markets I spoke about. Crypto. Okay? Extremely bullish. So you guys know we've been talking about crypto a little bit, and I've been telling you there's been insane opportunity on crypto. Ethereum, another crypto. NAS. Does anyone remember one of my best trades this week and what it came from? It was NAS, yep. Is anyone confused why I randomly chose NAS out of all the crazy Nope, it was right here, okay? It was very clear that it wanted to do one thing, so I took a look at it. US 500, aka NAS. US 30, aka NAS. Pretty much all the same thing. Gold. Can anyone else remember what crazy trade I took this week? I took a loss first and then took a big win that is still running. Does anyone know where that came from? Okay. Gold. Here's another gold. So, I mean, it's just different names for the same thing. Silver. Okay. And that's it. Okay, so these are the things that showed up super bullish. So again, you can change these filters a little bit, change them around. You know, if you're trading a lower time frame, you might do something like this where you go, hey, I want to see my 1 hour, a 15-minute, and that's it. Maybe this is something that you do like that, right? So and then you can what's it called? You can filter like this by most bullish. And you can go, okay, Bitcoin, NAS, gold, Euro GBP. Right, so if you traded Euro GBP this week on a lower time frame, do you think you probably had some bullish opportunities or no? 15-minute. Right, so this week, I mean, it's ugly. I probably would not touch this. It's relatively ugly, but there are still bullish opportunities here. And I mean, I guess you're trading a 1 minute if you're looking at a 15-minute higher time frame or a 5 minute. So like, yeah, there's entries in here, don't get me wrong, but this is how you can easily run a scan and decide whether something is worth looking at. So the thing I did, personally, like I just said, is I looked at the daily, the 4 hour, and the hourly for all bullish, and I simply looked at crypto, NAS, and gold, okay? So gold is one of the things that hit the list, so I said, okay, what's gold actually telling me? Now, a lot of you know we've been like rather bullish on this. We've been following this thing, but it's been very clear. The model here has been very, very bullish, right? It's been protected lows have been increasing, moving higher. Most recently had a bearish break. That's instantly assumption to be a reaccumulation. From there, price rebroke higher. That's confirmed reaccumulation, okay, and then broke higher again. That's a double MB, overall accumulation, price wants to move long. In this case, from there, we started following longs already up here, but then it started breaking down, so we stopped following, and then recently, it started moving higher, okay? So simply, in this case, we do have an SSC, right, specific SSC model that is moving price. So again, if any of you are SSC traders, could you have confirmed here with MBs, double MBs, Wyckoff, lower time frame confirmation to take this thing long? The answer is of course yes. And this is the money that you're now taking to the top side, right? This is one of your first SSCs that is delivered in the last, since here, right? So since here, this is the first SSC after 1,200, 1,300 days, because that's how SSCs function if you are just to trade them. But nonetheless, the market is in clear reaccumulation and moving long. So the weekly is showing you that it really wants to move long. And if this is a reaccumulation based on section 1 material, you can call this an institutional leg. So you know price wants to make a run on the next institutional leg higher, right? So this is creating that cloud of liquidity. You want to see price make a run through there. So overall, at least on the higher time frame, gold has a good bias for continuations long. That's done and dusted. So take a look at a lower time frame. You can look at a daily or a 3-day. In this case, I'll just do daily. And from there, before the entry, which was on this, like basically here. So everything here is important then. Okay, you have money that runs up, so clearly bullish, goes into reaccumulation through a breakdown, confirms reaccumulation, and continues moving long with newly created protected lows higher. These are MBs created to the top side, which means that demand is clearly valid and moving higher. And then you have another breakdown. At the time of this breakdown, we assumed reaccumulation. But since then, price continued breaking down and down and down. Now, multiple breaks, this many breaks in a row, could be viewed as two things now due to the context. One, it could be distribution because of the fact that price is breaking down and down and down and not just once or twice. But at the same time, it can be viewed as reaccumulation because of the higher time frame. And we have to now ask ourselves which one's more likely and which one can we prove. So in this case, you know, I didn't even trade these areas, right? I just kind of waited. Price made a break to the top side. Again, because this is the only time that matters to me, so I'm just following the criteria now. So money breaks top side. Now, again, you have two things it can be doing. It's in a redistribution or an accumulation. You don't know. It's pretty much 50-50. This is where the higher time frame, this is where the lower time frame or higher time frame models come into effect. The higher time frame is still in very clear reaccumulation, and the lower time frame we don't know about yet. But overall, just with this and this time frame in effect right now, we understand that the underlying message of this market is to the bullish side. That money is generally moving this thing bullish, especially with this buyer hand, okay? So we assume bullishness is prominent. Then you get a double MB. Not only a double MB, now this is another potential factor of context, it's where is the MB actually happening? Imagine this double MB was like this. 1, 2. If that happened, do you think that is more so an accumulation than this double MB? Yes or no? Which one's a better accumulation, 1 or 2, based on which one would have happened? Number 2. And that's also because of how price created the MB and where it created the range. That's another factor that you might have not considered yet, but that's a factor that's going to become important as you continue getting better at this. And you might notice this, where if it does something like this, you know it's likely to distribute. If it does something like this, it's likely because money is coming in such a way that the likelihood of bullishness being in that market because of the money that it took to actually make that kind of move is now very likely going to a direction. Okay, so based on this double MB, I assume accumulation. I assume prices want to keep moving long, and now I can prove that to myself on a lower time frame. You have a double MB now. Is the double MB the same as the weekly? I don't know. I don't really care, but maybe, probably. So now I can prove this to myself. So I'll jump down to my hourly because I know my hourly is before my 15-minute, where I'll trade it. Okay, so now we're on the hourly. On the hourly, if you guys remember, I was following longs here. Price broke down. Potential reaccumulation, right? Overall moving higher. Price breaks down. That's probably a reaccumulation. Price breaks down again. Probably a reaccumulation. And if you guys remember, when price began to break higher here, I assumed it was ready to be accumulated. As it broke higher here, I sent out a photo that I want to see it now set up for me. And then price broke down. So instead of confirming accumulation, it reconfirmed distribution and kept moving short, 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 short. So now you're in distribution. So I didn't touch gold whatsoever. Then it broke up, and broke up, and broke up. At that point, you can assume price has entered accumulation. Because now your most recent breaks are to the top side. You've had multiple of them. And not only that, but what kind of breaks have occurred? The accumulation breaks are ones that are showing you money's coming into the market. And do the higher timeframes agree with this occurring? Well, we know that the weekly is in overall accumulation / reaccumulation. We know that the daily is in potential accumulation or redistribution, but because of the power of it, remember it made a huge move, we assume accumulation, so we assume that it wants to keep going. Then it makes a breakdown. Instantly assume reaccumulation in my book. And I want to see price run this high and continue going long, which is why at that point, I sent out this. Okay. So we waited. And then right here, down, big wick, down candle. Right here, I sent out this. The MAs have started to move in tandem with price, which is a good aspect to me. This is one of my relevant factors. And prices are now kind of surfing along the rising 50 that might be undercutting a little bit, which is okay because it can still turn back up. So I sent out this. I want to see demand validation happen so then I can follow lower time frames. Demand validation occurs. Okay, demand validation occurs. What time was this at? 4 a.m. So I wasn't watching price at this time. Let's turn my thingy back on. There we go. Okay. Yeah, looks good. So price turns up. There it is. Makes the demand, right? It validates demand right here as a type 4. Type 4 demand got validated, which is phenomenal. So I jumped down lower. Okay. Now, as I jump down lower, I want to see what model we're in because, again, every model matters to me. What is my left to right telling me? Price made a crazy run up. That's clear accumulation. And most recently, broke down once. That's reaccumulation on this time frame. Then revalidated the reaccumulation with multiple breaks up. And recently has started breaking down. 1, 2, 3. Now, again, you have a 50-50. You have potential start of a distribution or you have reaccumulation. Okay? I am much more willing to lean towards the reaccumulation, especially if it becomes clear. Then we have demand validated around here. If you remember, that's a lower time from demand validated. And at that point, you've undergone a very clear start of a potential stage 1 with a clear schematic, if you want to call it that, and have began to move long and broke long. So you're confirming reaccumulation. So what did I do? I entered the buy stop of this ICI and took an instant loss. Okay, all good. Broke up a few times, broke down. This can now be reaccumulation or distribution. Again, two models can be present at the same time. It doesn't mean that you cannot trade based on the model or the context of the market you're actually watching. Okay, so I took a loss. Price breaks down and then fails to keep following through on the distribution and re-breaks long. I instantly assume accumulation. Keeps breaking long. I assume accumulation. And then it begins to undergo a schematic, a type 1 schematic in this case. Okay? It goes through its short-term sideways while MAs are moving higher and higher and want to move higher with a higher time frame bias that wants to move long with a scanner that is still shown extreme bullishness of this market. So, on the first setup of the ICI, I took a buy stop. I got tapped into my buy stop. and it became a game of management. Price took off, starting resetting up. So right now, if you took another setup here, it's not bad. If you took a buy stop, I probably wouldn't take this one because I don't like the fractalized MB here. This is not what I look for, so I'd wait. Spring. So this is great. This is now validating FMBs. You can see across a few time frames. So this FMB got validated, this one too. If you get an ICI now, that's a good setup as well. So this buy right now, buy stopping this is a phenomenal trade. And you might notice does anyone notice what that is? As well as accumulation, a Y call, blah, blah, blah. Yeah, it's a double MB. Right? That's my trade. I took my first partial at 1 to 3 because I went to sleep. So here, so it ran, started going sideways, and then I was going to sleep around, I think like here. So I set a partial at 1 to 3 RR and just went to sleep. That's it. So overnight, it hit my partial. Then I woke up the next day, I don't remember where, somewhere around here. And price began to just move aggressively. So I partialed at another aggressive partial. Took myself out of that. And now, I'm leaving the rest to run. Okay, that's really it. It was nothing more. And this was a phenomenal trade, by the way. If anyone took this, this is a great trade. And what's cool is, if you notice, when this happens, what is this when this happens? When this candle trades above and this one here, what is that considered right there, that candle? What is it created on the 15-minute? Demand validation of a type 4. Yep. So when that demand gets validated right there, you guys might see what I wrote here for all of you when it happened. This is where now, if you're a lower time frame trader, this is where you step down and you follow it. Let's see what could have been available to you. Let's just see, actually. So right here, boom. Let's move this to the left. Let's hide everything again. Okay, so right here, demand is validated. Okay, demand has been validated right there. This is a type 4 demand right there being validated. Done. Sorry, so this is it right here. This is the demand that got validated. So we assume through the validation of demand that the special things that we spoke about in the remastered course, with the orders being set in a way that they may be ready to run, are potentially ready to run. And the overall bias here of a 15-minute is very bullish, moving clearly. So you can expect this is going to now start a run. This is where you can jump down to your minute if you're entering 1-minute time frames and start watching for your models. So let's take a look at what we have. We have a market that made a move, started going sideways for a while. Right now it's in a stage 1 or a very not so clean range. So this is where you ignore price until it becomes clear, at least for me. So we wait. And price has money come in. Accumulation is likely present. Okay? Now, what can you wait for? You can wait for it just to clearly set up an ICI like this, or you can wait to label your schematic because you know that that's an element of what you want to wait for. Okay? So now, and again, you have to learn to turn your eyes to this if you really want to use this, but you have a potential selling climax or selling climax. Both can be a selling climax. We don't know. ST. So right now we know we're not ready yet. We want to see price kind of break down again and then maybe set up something. So nothing yet. I don't really see anything. So now you have a little bit of a schematic forming. It's a little bit weirder, but you have a selling climax, an ST and B, right? So now you have this schematic setting up right here, which means that you're undergoing some kind of stage 1. Personally, the MA, I want to see it go a little bit more sideways. So hopefully this comes down a little bit and then sets up. And I would take this trade if it can do that. So I'd wait now. Now, again, this is more so my personal rules, but, you know, depending on who you are. So I wait. Okay, so then the schematic continues to play out, right? Selling climax, ST, ST, STB. And now, if I can get a setup here, there's nothing wrong with this. This is a beautiful bullish market undergoing reaccumulation over demand. Yeah. You can buy stop the high, throw your stop loss in the stop box, and look to take it long. Doesn't validate. Still looks good though, but now it's a little bit, it's harder to trade, so I don't see it, so we'll wait. Yep, so set up the buy stop through the high. Everything's still holding. Throw the stops in the stop box, but I'm just going to throw them under these candles. Look to take it long. Nothing. Start setting up this sideways thing inside of here. I would say it's a little bit harder to see that one, so I'd ignore it. I just keep it at the higher one now. Okay, so you get buy stopped in. Start managing your trade accordingly. Look for your 1 to 3 for break even or to take your profit, whatever your system is. Start following this. Think about, I would move this to break even now. Super simple. There we go. Stop loss gets moved to break even. Think about a momentum loss. About 2RR at least. It is. So I'll put my stop loss there for 50% partial. Keep trailing this up now. So just imagine a candle losing the momentum, something like that. Okay, so just keep on doing this until it loses momentum for the first partial, something like that. Okay, we lose. We get a plus 1.8 RR. The rest can now be set here, or you can leave it for a larger one. I would just set it here because that's my rules right now. So I'll put it at the double MB. Another schematic has just started unfolding. You might see this. Selling climax, ST, STB. Pushes up. Not so clear right now, though. Could have traded this if you wanted. Okay. Keep moving your stop loss accordingly. Now you're getting a huge extension on price. So I take another partial under this candle low. Take another partial under this candle low, or 50% because it's a huge candle. So here. Keep trailing with 50% of the candle. Get stopped out right there at 9.56, but you've already taken half, so it's 4.25. Sorry, so it's 4.75, but you've taken a half off, so now it's 2.35. So 2.35. Now leave the rest at the stop loss and just let it do its thing. Wait for a new MB. There's another entry right there. Move your stop loss with the new MB. Move your stop loss with the new MB. Price starts going parabolic. Take another partial here. Take it off at 16. So 17 actually. So that puts you at what? 8.5 is half because we've already taken off one half. 4.25 is another half. And then we take off another half, which is now 2.12. Okay, leave the rest to go with the stop loss. Right here. Reaccumulates. We can leave it. It's not worth the gain. We wait. Okay, now we move it here. Now we move it here. Now we move it here. Now we get stopped out. 14, but we took off half, so it's 7. We took off half, so it's 3.5. We took off half, so it's 1.75. So again, 1.75. Okay, great. So you just made 2, 4, 5, 6, 7, 8. 8 RR off just that 1 minute if you traded the 1 minute, or if you're a 1 minute based trader. You just passed your entire evaluation, funded challenge, whatever the fuck you want, off of that one setup. And it's not the only one that was available. You set up here and here, right? Just following the same exact rules, right? And you didn't even have to trade the 15-minute thing I traded, right? I traded this one, right? You made your money here. That's it. That's all it took for you in price to make money. And you followed simple rules. And now my rules are still playing out. So I got my beautiful stop loss trailed the same way that I just taught you to trail that one. That's it. Just right here. And now I'm waiting. So for the gold trade, specifically, this one that I took, does anyone have any questions? Does everyone understand how and why Wyckoff is ingrained in the system and how you can now use it if you still want to make your system even more refined, to add factors to your system that you might have not noticed before, to take away the fluff or the randomness potentially, okay, of you going, but wait, you know, how come you're taking this one and not this one? Well, now you have a way to think about. P-Spot said, you didn't take the 1 minute one. No. I did not take this one at all. I was showing that. That was fully back-tested, kind of forward-tested to show you that you're not missing out on trades when moves start. You need to understand that this is now a good context for a lower time frame. And now you can get involved here alone, just here, like we just did, and make 8 RR. That's insane. You can make 8% on your account. If you're trading 100K, 200K, 500K, even a million, this is easy trade. That's it. That's all you have to do. Now, yes, the moves are not going to come like that every day, every week, whatever, blah, blah, blah. But it's available to you. And that's what's important. The second you start understanding what's available to you and how it's available to you, well, you start understanding what you're waiting for and what you're looking for, right? And now you can also specify things like, if this is a point that you would watch a 1 minute, where are other points you would watch a 1 minute? Some of you might notice here after this demand validation, right? And then prior to that, maybe here after this demand validation. Other than that, though, you would ignore all this price action because it's all in bearishness. So again, you should see firsthand how the things I teach, the ways I trade, are transferable across any time frames you're using. You just need to get very used to trading the context that makes sense, right? A lot of people are going to be stuck on the 1 minute here going, why can't I trade it? Why can't I trade it? Why can't I trade it? Why am I taking so many losses? Why am I always wrong? Why am I getting wicked out? Well, you're looking at it in a fucking terrible context. This is where you might start watching. This is where you should be watching. And now, once again, you're in a context where if you're a 1 minute trader, you're not touching this shit at all until this thing either breaks the high and starts putting in accumulation, or until it starts moving higher, making the MA slope higher. Maybe it goes through a Wyckoff schematic and then maybe makes a demand here. You're not touching this market at all in a lower time frame. This is the problem, though. People think that because they're on a lower time frame, the opportunities should always be available. That's not the case. You need to be aware of where to look for your opportunities, right? You need to know when and where it's worthy to even start watching or judging a market for opportunities. If you don't do that, you're going to take so many losses in just random areas. It's guaranteed to happen, right? But this is why I took this trade. And that is kind of the top-down breakdown and thought process of the trade. And hopefully, you see right now, it's nothing new. It's nothing different. It's the exact same thing, repeated every single week, happening right here, okay? All right, so I waited, started getting my accumulation, kind of like I just showed you guys. Took that long, well, set up the long, waited for it to come. It got not tapped yet. It got tapped in, and instantly, guys, as it got tapped, I drew this. Okay, well, I was ready to take my loss, right? Because I'm aware that prices can easily set up another accumulation here, and it actually would make sense. But I was willing to take on the risk, and then I got stopped out. And price did make that setup, but it did it ugly. It was a little bit ugly, so I didn't take it, right? If you did take this, you would buy stop here, and your stop could go under these lows right here. And you would have actually been in this trade still. But I didn't do that. I waited. And what did I wait for? I waited for another schematic within bullishness to play out. Again, this is a great time to start watching lower time frames too, because again, these are the points, these are the context that I look for on a higher time frame. This is the context right now of a 1 hour, a 4 hour, and a daily. If you're a 1 minute trader, this is the context where now you step down because now it's worthy. Then I set up my buy stop right through the high. It's the exact same thing. Buy stopping the MB. Nothing different. Even sent this out as it's happening. Like you guys can see it. Live price. It's right in front of you. Right? I get tapped in. What do I draw? Well, due to the movement, I expect it to actually still go through potentially even a mini accumulation and then give me another setup. But luckily enough, because we are beautiful traders here, price takes off. And I move to break even because it reached more than 1 to 3. Now I'm at break even. Okay. Okay. Had to go to sleep. Why didn't you partial at the first 2 huge candles? Because it's too early. Unless these first 2 candles went to here, I'm not touching it. This is just normality in price. I'm going to let price absorb these moves and continue moving. It's not worth the RR, the potential RR for me. Right? It's early in the move. But then I did partial at 1 to 3 because I was going to sleep. But if I didn't partial at 1 to 3 before going to sleep, this would be my first partial, which would have been a gain of 3.2 already, which would be insane. But that's okay because I'm not a robot. I'm not going to bullshit you. I'm not going to say what I should have done or what I did do, but make lies about it. This is just simply the way that the game played out due to the way that my normal schedule works, right? And yeah. You got your move, and now price is failing. So again, I even sent it. I said, I don't know what it wants to do right now, but hopefully I can survive the reaccumulation, and it picks up again. And now I'm in this trade. And hopefully this week, right, what's likely going to happen, or what I'd be waiting for if I'm trading this, is we're undergoing a schematic right now. It's probably going to open, hopefully go sideways like this, maybe even take out this low, then come up, and then it's going to set up something like this. Right? And then hopefully by the time this happens, this isn't big enough to stop me out. And instead it starts this move and I get to sit through new profit potential. And then hopefully we start on a crazy rampage higher. Right? Because this is just simply how markets move. And I don't know what the fuck it's going to do next. All I know is what I'm looking for and what I trade if it wants to set up and what I'm going to manage if it does what it needs to do. Okay? So it's just very simple for me what I want to look for there. Anton, if you were a stock, I'd buy it. You're funny, dude. Way better than the public workshop was I'm glad I'm joined. Mwah. Good shit, bro. I'm happy you're here too. Yeah, the public workshop, it was good, but it was a very, very surface level thing, right? Even, like, if you're new, like Gabor, it seems you are likely very new. This could seem super confusing even right now, but I hope you see firsthand that like you're learning all this stuff and you're going to learn it. And it's going to get better and better, right? You're actually going to develop an understanding, which is what I want to do for you. Right? Lower time doesn't mean you can automatically find setups just because higher time frame isn't set up. Exactly. Would you say not mechanical trading is a sense of emotional trading sorta or nah? I don't know. What do you mean by that? Reiterate that for me. Valley Boy says, yeah, defo, it was obvious to me you were clearly in stage 2 of the next time frame up when you took your first partial. Exactly. Yep. Could you take a look at Bitcoin? It feels like the 4 hour will soon present opportunities. So, you're saying the 4 hour is going to present opportunities? So that would mean that if you're trading a 4 hour, your validation should probably be like a 16 hour. So it is valid, right? Demand is valid, which is good. And 16 hour looks pretty good, looks bullish, yep. So that means that your higher time frame should be like a 120 hour, which is like what? What's 120 over 24? 20, 60, 80, 100. Like 5 days? 5 day chart or so? Yeah, so like It's bullish, don't get me wrong, but look at this, right? You're talking about a potentially extended market now. This is like, again, where do you want to be entering a 5-day? Here, 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 here even. This is where it gets hard, because now your entries are very likely to undergo the back and forth, because you're at the either the pinnacle of the stage 2 that wants to explode for no reason, or go through normality, right? The normal absorption of the move that just happened. So you have to be very, very careful of that specific thing, okay? Now, daily is not bad too, honestly. So you're saying 4 hour for a setup. So you have a bullish market into reaccumulation, into this schematic that underwent here. So, I mean, the 4 hour setup, right? The 4 hour setup was here, okay? This was your 4 hour setup. Right now, you have nothing. This needs to flush out again, okay? And then set up, or this is ready to go, and then you're not getting into it again. So on the 4 hour, personally, I don't see anything. If this set up anything like that, I would not take it. It's not clear at all. This was your 4 hour setup. This is late to the party. Anton, I'm still watching the course, webinar 106, and I don't have any system yet, so I can't really backtest anything, but I do want to get on the charts more often. What can I already do to get familiar with the concepts without backtesting a particular system? Throw on the indicator, or throw on this little guy onto your thing and start to do the things that you are learning about in the course. All right, start looking at that. Go back in price, though, and look at it. Don't do it on live price. I think you're better off looking at a daily on Bitcoin. I don't see Bitcoin as a good buy right now. Yeah, this is not ready. This needs to undergo some stage 1 back and forth into new accumulation, or it needs to make its move now. This is the final opportunity you had to enter this thing on the 4 hour at the moment. And then prior to that, it was beauty, right? Like if you're trading this thing, your entry should have been maybe here. That would have been a loss, but that's fine. It's pretty ugly, actually. Like this one, maybe. Like this is the only entry I see. So you're either in this, or your sideline now. Okay. Yeah, so crypto, I don't see anything right now on this. This is just... And then lower time frame, I mean, this is as simple as it gets to stay away from right now. Right? If you were trading this lower time frame, the only opportunities on this were here, here, and then here. And then price began to get ugly, and now it's ugly. So like lower time frame traders, you were good to be in or around these areas, and now you should be sidelined on the lowers. And 4 hour, you missed your opportunity if you didn't take this or this. Right now, though, this is ugly. This needs to undergo accumulation and then maybe set up, right? Then it could be a decent setup. But right now, this is the likelihood, so you stay out of it. You don't enter anything here. Because if it sets up like this will actually result in this. You understand that? So like the traders here are making money on this move and then the failure. They're making money here. And then if you're entering this, you're losing now. Okay? Anton, I think you should wear a chain, get a skin fade haircut and a tracksuit, and then name yourself A1 Anthony. Nice. I already did that, but I meant more additional things. I understand the indicators, like I can draw it in without using it, and I just keep watching, of course. All right. Sure. Deontay says, got to run. Thank you and Merry Christmas. Thank you, bro. And Merry Christmas to you as well. Sol. Yeah, so I saw a lot of people trading Sol. Sol was really clean multiple times. Got overextended. Went through its normal thing, right? Yeah, Sol's still in the... we spoke about this last week. You have opportunities. You had opportunities. This is too late. You are now either riding this or trading it on a very low time frame. There's absolutely no reason that you should be getting into it right here. Right? Entering here is the same as trying to enter it here at this pinnacle. Entering it here is the same as trying to enter it here at this pinnacle or at this pinnacle. There's no point. This is where your entries were. This is where your entries were. This is where you're profit taking or managing. If you're not in that, you missed it. You cannot show up to these markets after the fact. You have to learn to spot these markets prior to the fact. You need to start learning to spot them here. This is how you lose money long term. You don't trade those parts of price action. That's insane. Yeah, there's nothing else. There's nothing else on this thing. You need to learn to spot these prior. You cannot be trading this here. It makes no sense. Because now the likelihood is the sideways snapback and then new accumulation. And I'm not one for trying to guess that thing, right? Because you had a lot of people are trading the cryptos, and that's good, but you need to be able to walk away from it when it's time to walk away. Where was the crypto trade? Someone sent a crypto trade. I just don't know where it went. Bro, my notes are so fucking crazy. Yeah, so this is great. Good trade. Okay. He got involved on what, the 22nd? On the, was it hourly? 15-minute? Let's delete everything. It's 22nd, yeah. So he started getting involved where? 22, I think it's right here. So he got involved here, right? So let's circle that. Let's go to a 1 hour. Right, so look where he's trading, right? You're trying to trade this thing here, right, as it's just extended beyond belief. He's trading it here or here. You might even trade it here and be in a bad spot because you haven't understood that it has to undergo a little bit of sideways now, okay? The guy that keeps asking about the DLF, bro, give me a second. I will look at it for you in a sec, okay? Yeah. Like, that's good. And even now, if you're on a 15-minute, maybe, just maybe, you can get away with a trade right here. Right, that's an okay trade. And then this can go as a 15-minute trade. But you have to be very careful because the more setups like these that happen, the very likelihood that you're way too late to the party. But this trade was phenomenal, and it follows the exact rules taught here, right? Overall models are bullish, everything's moving bullish, and then you have phenomenal entries here, here, potentially here, 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 here. Back and forth, really hard to trade this action, I would say. And then right now, you have this accumulation to keep going. Yeah. Yeah, that's the same trade, exactly. That's approved. That's really good. This one's a bit eh. This one's much better than this one. I would rate this like probably this was probably an 8 out of 10. Okay. This one's harder to spot a little bit. It's okay actually, and it's very bullish. So actually, this is probably 9 out of 10. And then this one here is like a 4 out of 10. This is dog shit. But yeah, very good. Yeah, you had a lot of opportunity on cryptos, and you keep having opportunities on them. Like, these things are insane if you wait for the right stuff. But you can't show up to the party this late, or else it's going to end really, really bad. Yes, that was the crypto trade. Okay. Let's see what we got going on in the chats here. Jesus, what happened in the chats? Went through this. Looking at Bitcoin, we did. Saw this. Looks good. Did you watch the boxing? You guys can talk about boxing somewhere else. Come on, guys. Off topic or anywhere else. Thank you. Chen says, hey, Anton, I just replied regarding our options talking above. What, like way above? I don't know where that is, bro. Can you copy paste it for me? Copy paste it right now into a new chat. Don't reply to messages because I can't go all the way up. Analysis on DLF. Okay, I'll take a look at DLF for you. I don't know what that is though, but okay, so we have an Indian stock. Sure. So again, it's going to be very dependent what time frames you're trading, but this isn't clear accumulation. That's as easy as it comes. Again, like you're talking about something like Sol here, where you're very likely later to the party now. Fraud just got validated. Yeah, like again, your most recent entry was here, and that's the only one. It's very bullish. It wants to go bullish. It's all it's telling you right now. I would never try to short this if that's like something that you're trying to do. Yeah, from the top down, you have clear accumulation model, moving higher, reaccumulates, moves higher, moves higher, moves higher. So it's an accumulation. But again, entries were here, here, and maybe this is your last point right now before an explosion. So you could be watching right now. 4 hour, you're talking about low back and forth distribution / accumulation into accumulation, into reaccumulation, and now it's moving bullish, moving bullish, moving bullish. Most recently, demand got validated right here, which is nice to see. And the hourly went through a really, I would say, uglier schematic and then set up here. So again, this was your only buy right here at like 707. If you miss that purchase, you're done. I would not touch this. But even then, I would not take this myself because now you've entered the state where this market's likely to chop around and go down. Okay, so I would not trade this. Buy at 650. Through this guy, it's okay. I would not trade this. It's just not clear enough for me at that point. But yeah, if you bought here, you're in a good buy. You should just be managing this now. You should have definitely partialed here when this momentum was lost. And now if it goes like this, I would partial again like here or keep trailing and then get partialed here and let the rest run at this stop loss. That's the most recent double MB. So you have these two. And as it keeps growing, keeps going, keep moving your stop up and let it keep following until price finally stops you out. Very simple. Just use the management rules. The management rules taught here, at least from just the perspective of using those MBs, is very, very easy. Very powerful too. You can be in some crazy moves like that. Mito sent a back test. P-Spot says, Anton, if you ever step in the ring against other SMC groups and you let me know, I'll be your coach. I don't need to fight anyone. That sounds stupid, dude. I think something broke here. But this looks good. Oh, maybe it didn't break. Yeah, I mean, it looks good. Can he use 2 cups of coffee as gloves? All right, Chen says, yeah, actually, I've been trading options more than a year and made a small profit out of it, about 5%. I just feel like options kind of unstable and hard to set SL. Well, there's no SL with options. You buy the option, then you can either sell it when price hits a point you don't want to be in it anymore, or you hold the thing until expiration and manage the trade due to time decay. But the leverage it provides is amazing and tempting at the same time. But I'm still sort of back and forth if I should give up options trading and just trade actual assets. I would trade the actual asset. That's why I would like to get more deep understanding of options from you. I don't trade options, so I don't need to do that. Honestly speaking, Forex is all you need. If you put all the effort into FX, you could make more. What does it say? than the 5% you've made over the years with options trading. Yeah, wait, making 5% in a year is fucking awful. That's not even beating inflation, is it? That's not even beating the normal market. I just realized that that's what it says. But also, to second off of Dan, it's not just Forex that you need. You can just use the asset, okay? Like, if anything, I would actually recommend that a super beginner actually goes straight into stocks. Not an actual recommendation, guys, okay? It's not a guarantee. But, because, like, once you have a cleaner and easier moving stock, it just gets really easy to get behind that thing. But yeah. So my understanding is, as long as I put enough effort to learn all of the knowledge and system Anton provides in our community, then I should be able to trade everything. Yes. That's why I chose to trade options, because of the high leverage it provides. But again, like, why do you need that leverage? I don't believe that you're taking 1% risk on your account on a normal asset, and you're sad because, like, oh, you don't have enough money now to take 1%, because, you know, it's just not likely. You're probably easily able to enter and then have 1% risk. Gotta go eat dinner with the fam. I'll see you, man. Oh, Jesus. Probably got more love for you than my own father. Jesus Christ, Alex. Go be with your family, bro. I love you too, though. I'll see you. Dinner's waiting. I'll see you guys. Anyone that has dinner, I love you guys for being here. Thank you. All right, guys. So, upcoming week. Okay. It's very likely that I will be sidelined, because this week I have a lot of travel, right? Monday is Christmas. Tuesday is packing. Wednesday is leaving. So it's very, very likely that I will not be on the charts at all. However, if you are the special odd man out that needs to trade, do not forget that the day does not matter. If markets are setting up, then markets are setting up. And there's no reason that you can't follow them. So gold, I still like this thing. It's still bullish. It's still very clear. There's no reason that it can't set up again this week and give you new trades to continue moving higher. Looks good. NAS, it's been in this range. So this reminds me of UJ. If you guys remember UJ, I expect this to go sideways until it can make a new range. And at that point, I'll reconsider. But I have to be very mindful of the fact that since we're in the range, the likelihood is chop. Very simple. Crypto, I can't follow right now because I don't have a broker to follow crypto with. Let's take a look here. So we have crypto that I can't follow. NAS, I'm kind of following. Gold is super clear. Euro GBP was unclear. NZD USD and AUD USD. Let's take a look at those. Okay, so you have a lot of back and forth, likely accumulation, into quite a stronger moving accumulation up. So accumulation looks relatively decent, to be honest. 4 hour. You have demand validated the top side with overall accumulation present. Good to see. Hourly. It's okay. Reaccumulation. Yeah, I mean, you're looking to potentially set up something here on a 15-minute. Why not? Yeah, I mean, honestly, if this can come up and then set something up, I don't see a reason you can't trade that. Looks like there could be a decent opportunity there. But again, I'm probably not trading this week. AUD USD, probably same thing. Yeah, it looks very similar. Overall back and forth. Enters accumulation. Moving higher. Hourly is just in straight accumulation, right? Went through the stage 1. Easy accumulation here. Moving. Currently, double supply zone. So I would wait for the hourly here to make a demand zone before you start trading it. And now let's look at the other side. Let's see what we got on the bearish side now. UZCHF, yep, so that's been relatively bearish. I know that much, but I just have not followed it. Let's take a look. Yeah, so this thing has been really nice and bearish, been moving bearish. Beautiful opportunities this week. I just did not follow personally. Hourly has been in straight distribution, very, very clean distribution. And most recently has created only one demand zone, still holding bearish. So you probably have a good likelihood of this continuing down this week. But now as we get to the 15-minute, I'm going to flip this for 1 second for myself. Clear accumulation, reaccumulation, accumulation, validated. It's not clean right now. I'd probably wait for this to come up, maybe break down a little bit, and then set up maybe a schematic here into a setup. If we were to take this, here's your, yeah. So if anything, maybe you have something like that. This was the most recent like good trade I saw back here. There was a decent one here, but that one failed. And then you had some this week inside of here. Yeah. Not much there, personally. Euro CHF. This is 250.50. I'm not going to look at EJ. Euro CHF could be okay. Let's see. Okay, so it looks like USD CHF, but much wickier. So very ugly. Would ignore. This got a little wiki here, but that was to the top side. Generally, it has decent moves down. Wiki. Yeah, if this can set up, it'll be relatively good. Alvarado says oil, but oil's not even hitting my scan. Yep, I would not look at it. I don't like it. There's not even a reason to. The scanner just tells you it doesn't want to be looked at. And look at this. Look how quickly this showed us a dog shit bias. Right? Started a bullish move. Now it's in distribution. Now it's in redistribution. So yeah, if anything, it's like on the short side now. But the hourly just entered distribution through multi back and forth. Really weird. Really not clear. Maybe needs to make a move and then set something up. Yeah, super ugly. The scanner shows all. Look at this. It tells you it's going to be ugly. It tells you it doesn't know what it wants to do. Right? So I would ignore it completely. Anton, thank you for today's webinar. I appreciate all the time and effort you put into the community. Looking forward to a second one-on-one. I'm going to continue to watch your latest webbies and refine my system. Good. Very good. All right, guys. It's been a pleasure. All right. This year is coming to an end. Troy says, thank you for the commitment to the group. No problem, dude. I appreciate you. Listen, guys, please have a beautiful Merry Christmas Eve and a phenomenal Christmas. Spend time with your families, with whatever you're doing. I hope you just have a good one. That's all that matters. Meet the new year well. Meet it right. Start the next year on fucking fire. If anything, start even earlier. Have your Christmas. And if you got nothing to do, get into the swing of things. Get yourself fucking ready for another amazing year. Got some crazy plans coming up. So, thank you all, okay? Let's have a good week. Enjoy yourselves if you're trading. Good luck, traders. If you're not, enjoy your time. Enjoy your time with family, with festivities, whatever it is you're doing. All right, much love, everyone. Mwah. And I'll see you all in the trade talks and in the next webinar. All right. Godspeed, everyone.